if I can just roll it back, Anthony, of course, we deal with a lot of clients who are dealing in very, very liquid, highly volatile asset classes, be it commodities, be it FX, be it stocks, indices. So I just wanted to get your expert thoughts on this. Of course, we're entering a critical 2 weeks for financial markets. Of course, along with a third of S&P 500 companies announcing earnings, we're also keeping an eye out for global central bank policy meetings this week, preliminary Q3 GDP data from Europe and the US. And of course, this all culminates with the most important US election of recent memory, which you guys have already touched upon, taking place a week from tomorrow. So with all these key themes, Anthony, set to mature over this next 2 week window, volatility is expected to run rampant, and this will surely have an impact on market liquidity. So obviously your global investment firm, Skybridge Capital, has more than 9 billion of assets under management. Can you give us an insight on what your analysts and investment team strategy and plans are in navigating these next 2 weeks?
Well, I don't know. I don't know if I'm the best guy for that, Gaurav, because I don't really look at things over a 1 or 2 or 3 week period of time. We're not necessarily locked in the cockpit trading. I do have a fairly sizable allocation to somebody like Steve Cohen at 0.72, who's probably more, his team probably looks at things, some of the team looks at things from a volatility or trading perspective. But here's what I would say to you, and this is mostly common sense, and then I want to talk a little bit more about the macro of what I see over the next 24 months, is that there will be volatility, but it's not going to be exacerbated volatility because the Fed has already pumped in $2.4 trillion of capital on its way to another 1.6 trillion. And so the spigot is open. I think what should scare people, though, if you take yourselves back to March, the Fed had a fairly aggressive monetary policy. Remember, they had sort of switched things up at the end of 2018 and started to lower rates again and make things a little bit more progressive and higher in terms of the liquidity profile. And yet that really wasn't enough to handle the COVID-19 crisis. And so whether you're in an S&P 500 stock or you pick the most liquid security that you can think of, things are way less liquid than we would like them to be. And so this has always worried me about short-term trading, and it's always made me concerned about leverage. And so when I look at the leverage in the system right now, I think it's okay. And when I look at where the Fed is directionally in terms of where the spigot is, I think it's okay. And so I'm gonna say something that some of your peers on this call may like or dislike. I don't think you're going to see the volatility that others think. And that's primarily because so many market participants think that we're going to see a lot of volatility. You had said to me, we're not expecting volatility right now. Then I would say, okay, well, reflexively, we're probably going to get some of it. The same way March, I don't think people were expecting the pandemic. I will confess to you that I was not. I was at the World Economic Forum. I was there with people like Ray Dalio, Josh Friedman from Canyon Capital and others. We met with a series of epidemiologists and representatives from the World Health Organization. And that was maybe January 20th. First case in the US is January 21st. We walked out of that meeting thinking that the virus was going to be contained in Asia, that it was going to look more like MERS or SARS and not look like the movie Contagion starring Gwyneth Paltrow and Matt Damon. We missed that. And I own that mistake. And frankly, I had the worst year of my life in the month of March. So March for me was the worst year, if you will. Having said that, we've rallied back from there. But it's interesting, the hedge fund managers that were in that meeting with me all had really bad months in the month of March. So what do we know? We know we don't know. We know that we have to build our businesses stably, and we have to build our businesses with an idea towards diversity. And something that I've learned in 33 years of being in this business is the minute I start thinking I know something, I'm now in a danger zone for myself and my clients. So in quick summary, these are just predictions. This is just relative statistics. Because of the global coordination of monetary policy right now, I don't see the high levels of volatility as a result of the uncertainty around the election. And I will also say to you something that a lot of people don't believe. This is a contrarian view, is that regardless of the presidential outcome, the markets will actually be okay, primarily because of the Federal Reserve position related to market liquidity. And I'll take people back to 2008, going into 2009. The new Obama administration, they more or less had the same policies as the Bush administration did on the automobile industry, the financial services industry, et cetera. And Dr. Ben Bernanke was about to invoke the quantitative easing. And so if we get a Biden administration, first term, you're going to see many of the same things invoked there. If you get a second Trump administration, I think you'll get the same thing. The market may actually sell off with the Trump administration because it'll likely mean there'll be more protracted concern related to COVID-19. We don't have a coordinated policy in the U.S. Our statistics now are raging. We've had the highest number of cases was yesterday on a daily case count. We've got 41 or 42,000 people in the hospital right now related to COVID-19. The death rates are going up. We've ticked over 1,000 again, and people are scared. And if you look at the map of cases is rising in just about every state again. And I think that, without a coordinated policy, without a federal government response, Mr. Trump, there are people on this call that like him, are probably supporting him. They think he's good for business, but he sucks for business. Let me explain to you why he sucks for business. He sucks because he can't handle the pandemic. He sucks because he lies about the science. So you can't sit there and not fix the healthcare crisis in the United States, okay, without also trying to fix the economy, meaning you're not going to fix the economy until people fear less. They're willing to get outside of their homes more, and they're willing to transact in the economy. And with the case counts where they are right now, it is a direct reflection of his abysmal strategy and his malpractice here in the United States.